Let's go across to Faye now. And Faye, what do you have for us in the personal finance segment?
Well, because IT, FMCG and the pharma sector, those sectoral funds have done really well. But Dhirendra keeps insisting we shouldn't buy those funds. So we're going to find out if he's still going to stand by that recommendation. Let's bring in Dhirendra Kumar. Dhirendra, you always recommend that we shouldn't be investing in sectoral funds, especially given the market like this. When we talk to long-term investors, we talk about avoiding these funds, but let's look at the returns of the last 5 or 3 years. FMCG, pharma and IT funds still outperform equity diversified as a category. Should we then still avoid these funds in spite of the performance? Would you recommend we ignore that performance right now?
Yes, I think so, because when you invest in a diversified fund, when you invest in a fund which invests in all these sectors, if you look at these sectors, they are very prominent sectors, FMCG, pharma, IT and banking. And the issue with, the advantage, these numbers are quite misleading in a sense that these sector funds are either at the top or the bottom. If you would have looked at these numbers in 2007, FMCG and pharma were at the bottom of the pack. And that is exactly the reason why investors should not be investing in them. If you recall, 2 years back, banking was at the top of the pack and today it is at the bottom of the pack. So, the reason why an investor should be investing in a mutual fund or in equity should be to derive the benefit of equity. To moderate the risk, he should be diversified. So, and these sector funds are not a diversified vehicle. In fact, they are the opposite of that. And that is something which an investor should avoid. You are not being deprived of anything when you are not investing in a sector fund, because you have the exposure to these sectors in your portfolio anyway. There is one reason when there is one case in which investors should consider a sector fund. When you look at your portfolio and you find that something is completely amiss, and you want to dominate, you own 3 diversified equity funds, and you think that, and you feel that your fund or your investment should be overweight on banking for a specific reason or for general reason or for your very special reason of your own understanding. That is a case when you can actually use these funds to overemphasize something or emphasize something. Otherwise, I don't think these sector funds actually serve any purpose.
All right, so continue to avoid sectoral funds because they're cyclical in nature. We have a question from one of our viewers. N.K. Agarwal has written in, Dhirendra. He wants to know where he should invest 5,000 rupees a month to get good returns over the long term. So he's a long-term investor. He has 5,000 rupees to put away. Where would you like him to put that money?
If your long run is defined as 10 years and more, consider a large and mid-cap fund or a multi-cap fund. If you are thinking of 5 years and or around 5 years, 5-7 years, then I would say, and you want it with great stability, consider some balanced fund. And balanced fund with a large cap tilt, that is something which should help you provide or derive return with great stability.